is you need to debase the time and energy of everyone that commutes to work every single day. So think about it. I mean, why are people getting married later in life? Why are people having less kids? Why are people having less housing? Because it's more time and energy that goes into a quality of life that we expect. Because they're debasing our money, they're debasing the time and energy that we're contributing into the universe to make themselves whole on the whole in the balance sheet, right? On the global debt to GDP ratio. So I think they're going to debase the currency, which, by the way, where we agree, Bitcoin, gold, these are both assets that are outside the purview.
Strike in a recent interview with Daniela Cambon on the ITM Trading YouTube channel, CEO Jack Mers, one of the youngest Bitcoin visionaries, predicted that Bitcoin prices could reach $1 million per coin when central banks start the next round of money printing. Printing in QE, Mers warns that a bond market crisis is brewing and the Fed will have to intervene to prevent an implosion that could bring down the entire financial system, citing embattled currencies like the Argentine peso, Egyptian pound, Nigerian naira, and Japanese yen, which has lost more than half its value in 3 years. Jack earlier said the future QE rounds might be 3 times as large as those created during the epidemic, which was reaching $113 trillion by mid-2021, according to Nasdaq.com. Compared to the US's 13 most expensive wars, the $5.2 trillion spent on personal relief checks, immunizations, unemployment, and other objectives is larger than World War II's projected $4.7 trillion in today's money. If Jack's prognosis is correct and the Fed and other central banks produce even more money, asset prices will skyrocket and fiat currencies would lose value. Jack's decision to go all in on Bitcoin and abandon the US dollar and other fiat currencies earlier this year is likely why Bitcoin has increased by thousands of folds and remains the world's best performing asset since its creation. We'll now show you clips from Jack's insightful discussion with Cambon. Please like, share, subscribe, and switch on post alerts for more videos like this. Everything you do helps the YouTube algorithm and the channel's growth. Thanks and enjoy the video.
Yeah, I think we share a similar thesis and outlook on the world, which ultimately is shared human values, which is ultimately probably why we have great energy on the introduction to this show and we're going to be friends, right? I mean, a shared outlook on the
Absolutely.
world and shared values is what build relationships, which is the only thing that you can really die with. So I agree on that. I do also, though, think that money tends to be one. And so I don't totally envision a world where we have many monies, especially if they aren't imposed and enforced by government and violence. And so that's where we can probably have debate and have some fun and where I see the difference between gold and Bitcoin. But on net, we probably agree more with each other than any other. Yeah. I also, I think right now we're in this really weird environment where we've had rates that were raised faster than they've ever been raised before, and they've persisted. And now we have this Fed that's trying to scare markets and claim higher for longer, where in reality, I don't think it actually matters. It's clearly inflationary, whether you're looking at the stock market, gold, the real estate index, Bitcoin, everything is double digit year over year returns. And so it's clearly stimulative still. It's clearly inflationary still. I think people can get confused by the price of money, which is interest rates. But what about the supply of money? They're still stimulating, they're still printing dollars. And so I actually don't think it matters what the Fed does. It's all stimulative. And the reality is, my favorite metric is global debt to GDP, because it really, to me, it just tells the story very cleanly. Is that I view money as our time and energy in an abstracted form, our time and energy in a market good that we can either save or exchange. And so, what global debt to GDP tells me is that governments around the world have borrowed a tremendous amount of our time and energy from our future with no growth to pay it back. That loss has to be realized somewhere. Okay, so where's that loss going to be realized? They have two options. Either the people that lent them the time and energy or the money aren't going to get it back. And those are who? The bondholders. Those are all of the banks, all of the wealth in the world. Or they're going to debase the currency of the general populace and take time and energy from them. And that's what we call inflation. So to me, it doesn't really matter what the Fed does, higher for longer, we're going to cut. It's all a load of nonsense. It's all very distracting. It's that there's a loss that has to be realized somewhere. And it's either going to be all the banks have to collapse and the bond market and the sovereign debt market is going to go to zero, or they're going to debase the currency and inflate their way out, which is just ways of abstracting time and energy away from the populace to make themselves whole on what has been an egregious mistake in government and in fiat currency.
It's totally understandable and fair for Jack to dislike the US Federal Reserve and other central banks. Economists and macro analysts have repeatedly pointed out the stark difference between how the dollar performed and how much it was worth before and after the bank was established in 1913. This also helps explain why most of the founding fathers were against the idea of a central authority with too much power to decide how much Americans are worth. Thomas Jefferson said that he thought central banks were a greater threat to freedom than standing troops. Washington said that paper money is bad for business. John Adams is oppressed and victims of all kinds of fraud and unfair treatment in business. All the trouble is caused by paper money. It's a bad thing that people like. Jared Bernstein, chair of the U.S. Council of Economic Advisors, are now in charge of our financial systems and economic policies. He recently said that the U.S. government can't go bankrupt because we can print our own money. Bernstein, who sets the country's economic policies, not only admitted that the U.S. government can and does print money out of thin air, which they have denied for years, but he also refused to admit that our economic policies are broken, which is exactly why we are here today. Bernstein stumbling through the next question about why we need to borrow money when we can just print all the money we need is another huge sign that disaster is on the way. Let's watch the movie again.
We're running 2008 back. I mean, if they wanted to let the banks fail, they could have. I think de-dollarization started in 0809 because the world realized they don't care about the value of this world reserve currency. They don't care about protecting the shareholders of this dollar network. And they bailed those guys out. And that's the only way. And the reality is there's no easy way out. The other way is you need to debase the time and energy of everyone that commutes to work every single day. So think about it. I mean, why are people getting married later in life? Why are people having less kids? Why are people having less housing? Because it's more time and energy that goes into a quality of life that we expect. Because they're debasing our money, they're debasing the time and energy that we're contributing into the universe to make themselves whole on the whole in the balance sheet, right? On the global debt to GDP ratio. So I think they're going to debase the currency, which, by the way, where we agree, Bitcoin, gold, these are both assets that are outside the purview of their reach, right? They cannot debase these. And so it is a way to protect your time and energy, in my opinion, and why these assets probably perform very well.
When you say they, you're speaking of central bankers, correct?
Yeah, I mean, the reality is Janet Yellen is Jerome Powell's boss. I
Right.
mean, that's the
Well,
reality. Maybe not literally yet, but practically speaking, I mean, Jerome's job is to put in policies and pathways in order to stabilize the bond market, right? That's the whole overall position of the Fed. The Fed doesn't really have much of a choice and much authority anymore. So I guess I'm talking about central banks, but in practice, central banks and government have a lot more overlap than they were intended to be when they were founded. I want to let it go, but Janet Yellen benefits tremendously from a weaker dollar, right? I mean, in the sense that, I mean, how is she going to pay all this debt back? So I
but
think,
maybe they're
I
going to
mean,
say we don't care to care. We just won't pay the debt back. Let it roll.
well, then who's realizing the loss? There's a real loss that has to be realized by someone. There is no easy way out. And that's why I like calling money time and energy abstracted, because money isn't just a piece of paper that people can print. I go to work every single day and I exchange that time and energy for what we call money. And so who's realizing the loss is the real question. And if it's just going to let it roll, then maybe those financing all these loans over the years, which is our banks, all the higher upper echelon wealth in the world, they're not going to get paid back. So, for example, the bond market is getting absolutely obliterated right now.
Right.
Every bondholder is realizing, holy shit, I got a terrible deal from the US government. This is a disaster. This is a mess. Why are we seeing a Bitcoin ETF? Because people want other avenues to see real returns with their capital. And so if we keep going like we're going, then maybe it's the bondholders that are the ones that are having to realize the loss. But the game is who's realizing the loss. And that's why we explore this idea of what is money and where should we put our money, which is where should we store our time and energy, right? That's how I like to think about it. But the idea that there is a loss that isn't going to be realized is nonsensical, and that's political speak. That's what they want you to think. Money that we use within society. So again, money solved this idea of barter. So we can hyperfixate and focus on our jobs, and we don't have to exchange them for someone else's job. We can exchange them for money and then use them in an economy. It's what allowed us to have billions of people in the economy, digitize the economy, have an economy on the internet. And what we exchange our time and energy for cannot be centrally controlled by a group, especially government and politicians, because it will just be abused. And so that's what I think we've seen is just compounded abuse over decades and decades and decades to people that supposedly make decisions, don't even know how it works. So to me, it was just a clear as day example. And I mean, even right in there, right? I think he's right, by the way. The US government can't default. I think that's true. And that's the position they've always taken. So they will print, which is another way of saying they will inflate, they will debase, right? So they will take the time and energy of the general populace that has to go to work. Everyone that has to go to work every day will get less housing, less groceries, less gas, less cars, less family, less life expectancy in order to finance what they're doing, right? And the only other way is for them to let the bond market collapse and for us to reset the whole thing. So he's right, whether he knows it or not. He's unfortunately looks clueless and uneducated, though, but I don't know.
In the beginning of the year, Jack Mehrer said in a post on X that he no longer owned US dollars and was all in on Bitcoin. The thread has since been viewed almost 1 million times and liked over 12,000 times. Jack said that having dollars didn't make sense because too much money makes the value of money drop quickly. Here are some tweets from the thread about printing and spending too much. As an American millennial, I love my country, but I don't want to use our money. I'm all in on Bitcoin, and I'm setting my sails to go up or down with the ship. I think it's more important than ever to take a stand during the conversation with Cambone. Mers stresses that he still strongly believes in the American dream and the ideals on which the country was founded. However, he thinks that the country has lost all direction and won't get back on track until the corrupt financial system that takes from the poor to make the rich even richer falls apart. Luckily, the CEO of the strike thinks that the system is much closer to falling apart than everyone else thinks. What do you think about Jack's prediction that Bitcoin will be worth $1 million and his choice to stop using the US dollar altogether? Please share your thoughts, comments, and observations below, and don't forget to give this video a thumbs up. Make sure you subscribe to the channel and turn on the notification bell so you don't miss any of our videos with conversations and insightful analysis from the smartest people in the business. Thanks for showing up.